to sell enough new crop corn in particular. A lot of opportunity was taken to clean up old crop, but at the time we should have been selling the entire new crop option, our new crop bushels as well. But from the middle of June to the middle of July last year, we had a rally of 88 cents. That rally was fueled, number one, by Mother Nature, scaring the market into us having a flood in the east. The internet is a wonderful curse. The internet can be it's a two-edged sword. There's days that I really like the internet when I'm looking for something and I can find it very quickly, and there's days that I'm like, holy smokes, where's all this stuff coming from? In June, late June, early July, the entire grain market was flooded with every single picture you can imagine of every Indiana cornfield underwater. The market got spooked, especially on beans. Beans led the rally, corn followed. On corn, in a 4-week period of time, the funds went from short 151,000 contracts to long 240-some thousand contracts. In total, in 4 weeks, the managed money crowd bought 2 billion bushels of corn in 4 weeks. That rallied us 88 cents. That was the only material rally we saw last year. Today, this managed money crowd is now shorter than that. They have another record short position on. The world is still bearish commodities because they're bullish the dollar. They feel like we've got all this oversupply. You want to talk about the Argentine story of the new president there, and that's going to bring on new supply. I always like to say, if everything you read in a morning comment, and it might be a morning comment that we write, everything you read in the morning, if you go through an entire week and you can't find a single bullish comment, it's time to buy something. If everything you read is bearish, is bullish, and you know, corn's at $5 and it's going to 6, and everything you read is why it's going to go to 6, it's time to sell. We have the entire market leaning to the short side. We are record short managed money. We are record short small spec, which is another category of smaller traders. And we are also record long in one category. Anybody want to guess what that category is? Record long? It's all you people in the room. Farmers. Producers for today are record long. They have more unpriced corn to sell than probably they've ever had at any point in time in history. So when does this all start to rationalize? When does this happen? When does this shift happen? The market would love to know when all of you want to sell your corn. It's probably not going to be on the same day. I don't know of any group of farmers that are all going to agree on what day to sell in one room. There will be a catalyst that's going to cause this group to get scared at some point in time. I don't know when, I don't know why, I don't know if it's going to be in February or in July. But whenever it does happen, it will cause the rally to extend higher than it likely should go, but it's because they're continuing to unwind all those short positions, and the only way they do that is by buying. That is going to be the time, whenever it happens, to start to lay on to finishing up old crop marketing and doing new crop marketing. I don't know what's going to result in an 88-cent rally. My guess is it will not be quite that strong of a rally because we have a lot more corn to sell right now than we did last June, July. But if we were to spark a short covering rally of that magnitude today, I bet it's a 40 or 50-cent rally. And it needs to be taken advantage of. That's something that's going to happen. These funds are never, they're not a patient group. Their money has to be moving all the time. So they're either adding to that short or they're covering that short. And they have all their charts and technical trading and the red line crossed the blue line, so I'm going to buy. It's all those types of things. They trade differently than we do. I like to say this group doesn't know how to spell corn. They are not fundamental people. They don't grow the crop. They don't look at the weather like we do. They do not see the S&Ds. They trade it just like a stock. Corn is traded just like Apple or Microsoft. But they trade so much volume and so much money that they move the markets, especially short term. The managed money crowd is the reason we might move from 350 to 375 in 2 weeks. The fundamentals are why we're in a 350 market and not a 550 market. The fundamentals drive the range that we're going to see over a longer period of time. But that's going to be an opportunity at some point. That's also the reason why we've been really depressed on the prices here in the short run. I got a couple of bean slides, certainly less than corn, but any corn questions before I move on to a few bean items? Too big of a group. You get 30 or 40, you might have some questions. You get 100, however many you don't see. Hey, we got one in the back. Thank you.
Is everybody buying into the government estimate of the corn? Everybody, it was so wet, so long. Do you really believe the yield is out there?
Great question. I don't know if everybody heard it, but do we kind of buy into the USDA's number for production? I got a really smart ass answer to that I'm really refraining from. It really doesn't matter because we trade what the USDA says. And unfortunately, that's just a fact. When you look at all these managed money guys, they trade whatever the USDA says and they trade it as its gospel. That is a true statement.
What do you believe?
What do I believe? I believe a farmer in Minnesota grew 50 bushels more this year than he did last year, and I believe a farmer in Illinois grew 50 bushels less than he did last year. And from an offsetting basis, I don't think the last 2 crop years nationally were that much different. I really don't. When I do meetings in Minnesota, and I've done about 6 of them, every farmer that comes up to me says, I just had the best corn crop I've ever had. I had 240, 250 bushel corn. Those farmers in Minnesota sounded just like the farmers in a lot of Illinois last year. I got 250, it was a record by 40 bushels an acre. So my answer along with the USDA, I think, is I do think the crop sizes are similar. I do get the question a lot, which is kind of a conspiracy theory question. Why would I believe the USDA? Don't they see that I had a 80 bushel yield and on my farm? And aren't they seeing all those flooded acres? They don't buy into all the daily minutia. They do their stocks reports, and they have 22,000 surveys they send out every quarter. And what those stocks come back as, commercial and on-farm stocks, they back that into the S&D and come up with their production. I think our USDA does as good a job as any other country in the world at analyzing the size of our crop. But to say, do I fully believe every number they come out with? No, I don't. But I do think the last 2 crop years were very similar nationally. Beans, unless we have another corn question. Beans, we have a very different S&D looking from year to year. If you look at the ending stocks last year, we were at 191 to finish the year off with. We were a 4.9% stocks to use ratio. Remember that number of 10% that I talked about in corn. 4.9% is a very short, very tight bean crop. That means we only have about 2 weeks left at the end of the year. This is last year, not this year, this is last year. Before we get to new crop. This year, we're at 440. That was the number last week from the USDA, and that's 11.9%. Certainly that's a lot heavier, but not crazy burdensome. If you think about last year's price action, we saw 1050 beans a couple times, 1025. We spent a lot of time in this low 10 range a couple of months last year. The reason that we did that was because the ending stocks kept shrinking every month from January forward. If you were to look at these 2 reports and look at them at the same point in time, right now we're 440 and it's January. If you were to look at the January 2015 S&D on beans, the expectation for ending stocks was 410. We had, whatever that is, 220 million bushels of beans disappear from January of 2015 to September 1st of 2015. Where did all those beans go? And another question is, were all those beans there to begin with? It kind of gets back to your question about were they ever there to start with. We had 3 categories of bean demand that grew every month after January last year. We increased exports about 80 million bushels, we increased crush about 110 million bushels, and we increased what's called residual demand about 80 million bushels. Residual demand is the I don't know where it went category. If you have Q1 stocks and you have Q2 stocks, obviously Q2 is smaller, and you know you exported this much, crushed this much, and this much went to seed, we're still missing like 20 million bushels in there. Where did they go? I don't know where they went. The government doesn't know where they went. It's called residual demand. Residual demand is usually one of 2 things. Either the ending stocks that were carried in from the previous year were actually less than what we thought, which in this case it was probably the case, or the yield wasn't as good as we thought. They're still going to use that yield number after January all the way through. But if that number is a little too high, we see residual demand increase all year long. The question for this year is, we're starting at almost the same point as we were last year. Last year we saw a couple periods of time we saw $10 beans. Do we think we're going to see that this year? Do we think we're going to see demand increases like we saw last year? My answer to that question is I don't think so. I don't think we're going to increase exports from where we have them today at all. I actually think there's risk that our crush number will go down, not up, because crush margins last year were about $1.70 a bushel profit for plants like Quincy. Today they're about 40 cents, and that's about the break-even level for a crush plant. Most crush plants are making zero money today, crushing beans into meal and oil. So I don't think that number goes up. It probably has a risk of going down. And the residual demand is an unknown. So my outlook on beans is not quite as positive, or maybe there's some hidden demand pieces like I had on corn. I'm more concerned about bean price. You look at a market like today, I mean, you can't judge anything by one day's price action, but a market like today, when the sky was falling everywhere, crude oil, energies, financial markets were off at one point over 500 and so forth, and we had corn unchanged to up a penny, and we had beans down 10 or 11 a lot of the day. They wound up closing down 9. Days like that kind of fit the bias that I have in the corn market, which is short term. I think corn has a little bit more room to go higher, but I'm worried about beans. I'm worried that our bean supply is closer to this number, what we're saying it is now, than what it was this time last year, even though the numbers were similar. I don't think we have the built-in demand to add that we had last year. Anecdotally, this year's bean crop just felt bigger. The elevators we deal with, and we deal with 70 or 80 of them, virtually every elevator, and Ursa's an exception because the river closes, and so the amount that Ursa needs to ship at harvest is much higher than a lot of other places. But for elevators that hold beans on through the winter and try to earn carry on some of that stuff, most of the elevators we talk, I'd say 85–90% will tell us they had in stock on December 31st 20% more beans than they've ever had before in their elevator, in the bins. It just feels like we have a big bean crop out there. So I'm a little worried about beans, bean prices in particular. But corn is a little bit more optimistic. 2 record bean crops in a row. And the point I want to make on this particular slide is not that we had 2 record crops, it's by how much we had 2 record crops. Remember, the ending stocks number from the previous slide was 440. We have had 2 record bean crops in a row where we beat the previous record, which was in 2009. We beat that record by over 600 million bushels back to back in 2 back-to-back years. So we not only had 2 big bean crops in a row, we had 2 massive bean crops in a row. At the same time, Brazil has had 5 out of the last 6 years have been record crops, and that's also because of acres. That's not all because of yield. Brazil continues to grow more acres. Until this year, we're expecting a little decline. The other thing that's interesting about Brazil, if you go back 6 years, Brazil has gone from a 70 million ton, which is about 2.8 billion bushels of beans 6 years ago, at 70 million tons, to now 100 million tons. They have grown 1.2 billion bushels in annual demand in just 6 years, or annual supply in just 6 years. So the growth coming out of Brazil continues to be just staggering. Now that is slowing, and that's slowing substantially. And in fact, there's a lot of forecasts out there that this year's crop might be smaller than last year's crop in Brazil, even though they had a 5 to 6% increase in acres. The yields are coming off a little disappointing down there. We had 9 state records again in beans, and we tied 2 states. We had 11 total records in beans. This is the dispersion that we had in state over state data, not nearly as compelling as the corn one between east and west. The large drop in soybeans, shouldn't surprise anyone in this area, was Missouri. Missouri grew 61 million bushels less soybeans this year than last year. Last year's bean crop was phenomenal. This year's bean crop was very, very average, and that's only counting the acres that got planted. We know there was a lot of acres that did not get planted in certain parts of Missouri. I have pretty much already gone through these next 2 slides. This is just kind of a way to explain where this extra demand came from last year, so I'm going to breeze through those. The fund position is very similar. If you look at last year, the bean short was a record, almost 90,000 contract, which is 450 million bushels. And they bought, in a matter of about 6 weeks, they bought all that position back and went long about an equal amount. Just slightly less, maybe 80,000 contracts, and that caused a $1.20 rally in beans. The funds are not as record short beans today as they are on corn. Corn, they are record short. Beans, they have the second biggest short position that they've ever had. So that will, at some point, be a catalyst. We just need to see what that spark will be. A couple of things to end with on the market outlook side, and then I just got a couple of really quick things on the program, and then I'll be done. I think the corn section in particular, there's a few signs that I tried to point out that I would maybe call it hope, maybe call it whatever. I wanted to leave you with a few thoughts that you should write down because you want to share it with your coffee crowd tomorrow and really impress them when you're at Noni's and Ursa or Casey's and Minden or all those places I used to hang out as a youngster. It used to be called the Hoop and Wink. I don't know where Noni's came from, but it was the Hoop and Wink. It's what I call it. We have not had a year that ends in 6 that we've had an above trend line yield for 4 decades. 06, 96, 86. We ended 6 this year. So we haven't had a year in 4 decades where we've ended the year in 6 where we've had an above trend line yield. If you go back to 1956, the Chicago Board of Trade keeps records back that far electronically. There have been 3 times when we've had 3 consecutive years of lower prices. So if you take the Jan 1 price, go all the way to the December 31 price, if it's lower, that's a down year. We have had 3 times since 1956 that we have gone down 3 years in a row. 2015 was the 3rd time. We have never, since 1956, gone down 4 years in a row. That is not a marketing plan. That is just an observation. I spent, as I said earlier, a fair amount of time in Minnesota. There is something to, especially if you're from Minnesota, and if there's a few people that have grown up in Minnesota, I apologize, but there is something with that group up there that they really like to watch the Great Lakes and the amount of ice on the Great Lakes. They even have these ice forecasts and these percent of ice coverage. You go back 30 years, there has never been a year where the coverage of ice on the Great Lakes has been below 20% and they've had above trend line yields. Anytime they have low levels of ice on the Great Lakes, they typically have below trend line yields, and the level of ice on the Great Lakes today is about 5%. Again, that's not a marketing plan, it's an observation. So, you add on top of it this weather phenomenon that we have. This El Nino to La Nina, what it's going to do, when it's going to do it, the volatility that we're seeing in weather now. You throw a couple of little anecdotal things that I just threw out there just for fun as much as anything. We feel like we're very much near the bottom of the range for both corn and beans, frankly. I think beans could go down a little bit more. They won't spend a lot of time below where we're at now. But our view on corn price in particular is this 350 to 360 range is very hard for the market to go below. It's tried about 4 times in the last 5 or 6 months, and it stops about the same place every time. 350 to 360 is where a lot of buyers come in. We have a ton of ethanol clients. When we get down to 350, 360 range, we are selling puts till the cows come home, because that's what the market tells us to do. And that's been kind of that floor on the market. And we've come off of that level. We're in the close to 370 range right now. I'm not saying 10 to 15 cents is a big rally. It's not. That's just a bounce up off the bottom. But I think we're carving out a bottom for corn prices. I think beans could go down a little bit more, maybe 8 1/4, but over a longer term, beans are probably carving out a bottom. When I look at the upper end of prices for old crop corn, if we see a 4 in front of an old crop futures month, which we have March, May, July, and September left, that number needs to be sold. If we see $4, it's only 30 cents above where we're at today. In terms of volatility, 30 cents is very well within the range of possibility. If we see that 30-cent rally, the market needs to be sold. Your bushels need to be sold. If we see something above $4, it is very likely going to be weather driven. It will very likely be more a hot and dry. Wet springs usually don't give us lasting rallies. Dry summers do. We might get a little bit of a rally if we have a wet spring. They're usually pretty shallow. Maybe that gets up to 4. Maybe that's the catalyst to get us to 4. I would finish up my old crop marketing at that point in time. If we have more weather issues later in the year, we get towards 4.25, I'm gonna have a lot of new crop bushels pretty well locked up for corn.